Chigozie, thank you so much for joining us today.
Thank you for having me.
Let's just start off, Chigozie, of course, with his take on the
figures,
besides even the GDP figures. Let's even just hear what he even has to say, of course, about the MPC decision so far today. Chigozie, any surprises there for you?
Not exactly. The system has been quite stable.
Okay.
The GDP numbers came in, although not as impressive as we would have loved it to be. If you try to unpack the GDP, you realize that it appears as though that the economy is also sliding back into a degrowth. I mean, when growth in the current quarter is lower than that of the previous. But what is more interesting, again, is to say that it is not Uhuru yet, because if you juxtapose this with the nominal GDP growth as against inflation, you realize that we really need to grow much more. And again, but it's quite impressive. The economy is rolling out of recession, and it's important to keep rates a little bit quite stable. There is no need for any quite distortive policy, and I think that is why the MPC largely held the rates stable, pending when we observe the economy a little bit more in the coming quarters to see how events unfold.
Because is it surprising to you that the last quarter GDP figures, of course, were on the high, and of course, with oil prices ticking up, we're seeing a lower number in the first quarter of 2018. What do you think played there? I mean, the issue of what's happening in the non-oil sector, it's almost like a rhetoric now, So let's just concentrate on oil's contribution and the figures we're seeing so far.
I mean, well, the trade in the oil sector has been quite impressive. I mean, you realize that the price is going up, output is up from about 1.6 million barrels per day to about 2 million barrels per day. Also, oil price is inching close to 80 compared to about 60, 65. It was as at the last quarter. So, but what you realize is that the oil sector only contributes about 9% to the GDP. So we have the non-oil sector, which recorded less than 1% growth in Q1 of 2018. So that, we believe, constituted a drag on the GDP. So, it's not quite an impressive outing, and we're not very surprised, because in as much as the system has been quite stable, in as much as the economy is rolling out of recession, the pace has been quite slower, especially at the non-oil space. There are still a lot of challenges around capital, challenges around infrastructure, challenge around, policy environment that sort of motivates investment into the system, and all this slows down activities at the non-oil space. So I think that is what culminated into what we saw, a GDP of 1.95% as compared to more than 2% we witnessed at the last quarter.
Okay, so now let's move on to the contributions of the financial sector. The financial sector went up from, I believe, about 0.4% last quarter, that's Q4 2017, to about 13.3% in Q1. Is that a recovery or what? What do you think about this?
Yeah, I mean, what we must realize is that the financial sector is massive. We are looking at the equity space, we have a market cap of in excess of 14 trillion. At the debt space, we have a market cap in excess of 24 trillion naira. At the pension asset side, we have about 7.5 trillion naira. So again, if you put this all together, as well as the banks that have an asset size of over 20 trillion, so the financial sector is quite massive. And what you realize also is that over the past 1 year, there have been massive investments in that space, especially at the technology end. Today you hear about TechFest. Today you hear about Diamond Closer. You hear about Diamond Ada chatbots. These are all innovations, and these are capital-intensive innovations that is going into the technology space. And this is happening across board, because efficiency is the new competitive frontier. And banks and non-banks are trying as much as possible to make investments that will let them penetrate, especially the retail space. So if you put this all together, you realize that the sector has potentials to grow even much more. Of course, you realize that back when we were in recession, it contracted by more than 5%. And now we are making progress. And it is a progress that we strongly believe will be sustained by the time banks and other financial institutions begin to work these assets, work these investments that has been synced into the system for value, even across other industries.
Because now we talk about potential. When you talk about potential here, especially for the financial sector, talk us through what strategy you think is going to run through in the financial space. So, what do you think we'll begin to see unfold in the financial space?
When you talk about business strategy in the financial services sector, it's quite diverse. At the banking side, what you realize is that a lot of banks are beginning to understand that the future of banking is retail. So banks try to mop up as much as low-cost deposit as possible, as well as try to penetrate sectors that has potentials from the risk asset side. So a lot of infrastructure, a lot of investment, a lot of innovation is going to happen around the technology side of the financial services space.
Now, Chigozie, when I talk about a theme running through, are we going to be seeing an aggressive campaign towards banking the unbanked? Are we going to be seeing more banks, of course, employ technology to do this in the coming quarter?
Of course, financial inclusion is a dominant theme. It's a dominant theme in the industry, both for banks and non-banks. In the banking space, you see a lot of banks penetrating that space quite more aggressively, especially with products that are, channeled towards using technology to bank the unbanked. So, I mean, today you hear about Diamond Closer, you hear about Diamond Better. So these are all, technology-led innovative products that are targeted towards, reducing financial exclusion as much as possible. So that is the dominant theme in the industry, and the central bank and bankers committee and all the banks are quite excited about driving this, because obviously we have to bring in more people into the financially included space.
Well, thank you very much for your time. Chigozie Muogbo there, Team Lead Research and Market Intelligence at Diamond Bank.